For decades, we've been told that real estate is the ultimate path to wealth. Buy land because they're not making any more of it. And real estate never goes down. It's a tangible asset that you can touch and feel. These mantras have driven millions of Americans to pour their life savings into property. But what if I told you that the real estate formula that created generational wealth for the past 50 years is now fundamentally broken? I'm going to show you why the smartest investors are quietly exiting the real estate market and moving their capital into something far more powerful: professional Bitcoin mining operations. This isn't just about crypto versus property. This is about understanding a seismic shift in how wealth is created and preserved in the digital age. Let's be honest about what's happening in real estate right now. The market is facing not just one problem, but a perfect storm of multiple crises converging at once. First, interest rates have completely crushed the real estate formula. For decades, real estate thrived because of cheap debt. Investors could buy property, leverage it with low-interest loans, and generate strong cash flow. But now, mortgage rates have more than doubled since 2021, hovering around 7 to 8%. And this has destroyed the affordability for regular buyers and obliterated margins for investors. Look at this example. A $500,000 property with 20% down now comes with a monthly mortgage of about $2,800 versus $1,700 just 2 years ago. Add in your property taxes, insurance, maintenance, and potential vacancies, and suddenly you're looking at negative cash flow every month. Many smart investors are realizing that they could earn more with a 5% treasury bond without dealing with tenants, toilets, and termites. Second, we're facing an unprecedented affordability crisis. Home prices have skyrocketed over the past decade, but wages simply haven't kept pace. The American dream of homeownership is mathematically impossible for millions of people now. This shrinking pool of qualified buyers means less demand, which inevitably leads to stagnating or falling home prices. That safe bet isn't so safe anymore. Third, we're witnessing the collapse of the short-term rental market. During the 2020 to 2022 boom, thousands of investors rushed to buy properties for Airbnb, and it worked until it didn't. With travel patterns normalizing, increased competition, and cities cracking down with new regulations, hosts are struggling to fill their calendars. In many markets, Airbnb income has dropped by 30 to 50%. Those who over-leveraged with interest-only loans or adjustable rate mortgages are now facing a harsh reality. They can't cover their monthly payments. We're already seeing a wave of panic selling in vacation markets, which is putting more inventory on the market and driving prices down. But these aren't just temporary problems. There are fundamental structural shifts happening that are permanently changing the value proposition of real estate. Remote work has killed location-based value. The traditional equation where location drove long-term appreciation is breaking down. People no longer need to live in dense, expensive urban centers to access high-paying jobs. Cities like New York, San Francisco, and Seattle are seeing residents flee for lower cost, higher quality of life areas. Why buy overpriced property when you can rent, invest the difference, and live freely? We're also facing a demographic time bomb. Baby boomers, who hold a massive share of real estate wealth, are entering retirement and starting to sell. As they downsize, retire, or pass away, their homes will hit the market in droves over the next 10 to 15 years. But who will buy them? Younger generations are saddled with student debt, facing lower real wages, and they have different values around ownership and mobility. This generational mismatch means more supply than demand, which could depress prices for years or decades. Meanwhile, home builders went into overdrive during the recent boom, creating massive amounts of new inventory, especially in states like Texas, Arizona, and Florida. With demand now softening, many of these new homes sit unsold or are being offered with major incentives. If a flood of inventory hits an already soft market, then prices must come down. This isn't speculation, it's just basic economics. So where are smart investors putting their capital instead? They're building wealth through professional Bitcoin mining operations. Now, I know what you might be thinking. Isn't Bitcoin mining just for tech geeks with coding skills? Or don't you need to understand some kind of complicated crypto concepts? The reality is that professional Bitcoin mining has evolved dramatically. Today, it offers something that real estate investors desperately want but can no longer find: significant passive income combined with extraordinary tax advantages. Let me break down why forward-thinking investors are making this shift. First, professional Bitcoin mining offers incredible tax advantages. Unlike real estate, where depreciation benefits are spread over 27.5 years, mining equipment can be depreciated much faster, often within the first year through bonus depreciation. This means you can potentially write off hundreds of thousands of dollars in the first year of operation, creating a tax shield that real estate simply can't match. For high-income professionals and business owners, this alone is worth serious consideration. Second, professional mining creates true passive income. Not the I still have to deal with tenants and repairs kind of passive that real estate offers, but actual hands-off income generation. With the right professional mining partner, you never have to touch a single piece of equipment or write a line of code. Everything is handled for you while you receive Bitcoin regularly. Third, Bitcoin mining positions you at the intersection of two unstoppable trends: the digitization of money and the transformation of our energy grid. Did you know that a third of all of the energy generated in the world goes completely unused? Well, Bitcoin mining helps monetize this wasted energy, creating a more efficient system while generating value 24/7. This isn't just about making money today, it's about positioning yourself correctly for the future of both finance and energy. But there's a critical distinction to make here. Amateur Bitcoin mining, buying equipment on your own and trying to run it from your garage, is just as problematic as amateur real estate investing. Professional Bitcoin mining is a completely different approach. We use institutional-grade facilities with purpose-built infrastructure that comes with expert management by experienced professionals. Not only that, there's strategic equipment selection and deployment, tax-optimized structures for maximum advantages, and complete transparency in reporting. At Abundant Minds, we've built exactly this type of premium operation. Our clients are successful entrepreneurs and high-net-worth individuals who want exposure to Bitcoin mining without any of the technical complexity. The beauty of professional Bitcoin mining is that it solves the very problems plaguing real estate investors right now. Instead of negative cash flow, you generate ongoing Bitcoin income. Instead of property management headaches, everything is handled for you. Instead of illiquid assets, you build a position in the world's best performing asset of the last decade that trades 24/7. Instead of minimal tax advantages, you get significant write-offs. The real estate market is facing unprecedented challenges. The formula that worked for decades is broken, and smart money is already moving elsewhere. Meanwhile, the US government is establishing a strategic Bitcoin reserve, recognizing what forward-thinking investors already know: that Bitcoin is becoming a critical strategic asset for our future. Professional Bitcoin mining offers a unique opportunity to position yourself ahead of this transition. It combines the tax advantages that real estate investors love with the potential growth of the digital economy, all without the headaches of management. Remember, the biggest regret in investing isn't losing money, it's missing opportunities that were right in front of you.